We are back at it again here with another video with Invest for Tomorrow. To all the first time viewers to investors, welcome to the channel. To all the subscribers, welcome back. All I ask from returns for to smash that like button, tell me you watch this video, helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with the S&P 500 index. It is in correction mode and the volatility continues. In my last video, I stated that we could see this type of action happening, right? Where we had extreme weakness on 42 vision, things started to pull upwards, and eventually once it started to go into strength, it was going to eventually reverse, right? And that's where we're at right now. That's exactly what happened. Extreme weakness, some strength, reverse. That's the clarity 42 vision brings. And not only that, but with the SPY bot, we're able to see efficiently how quick things are moving. So the S&P 500 index today was going upwards, right? If you look at the SPY, let's zoom on in. Here on the 30-minute, things were kind of consolidating after that dip, and it spiked up when the Fed meeting started, right at around 2 p.m. But at 2:20, okay, our SPY bot, as you see it pop up, sent us a notification that things were looking pretty bearish. And if you see it there in the charts, it turns out to work out that way, and puts literally went up 2 to 3x. And if you see it here live on the chart, it's exactly at this point right there. Right there is when things went up, things started to shift, and a lot of people got caught up in that bull trap, especially thinking that this right here was bringing itself back up with momentum and it was going to continue. It quickly changed things very fast. Now, as things went into the aftermarket hours, we just got a bull indicator here, but not one just yet on the 15-minute. As you could see, the bear indicators right there, and things pulled downwards. You can now gain access to all of this by joining us. The link is down below to the 42 vision indicators, and you'll gain access to the weekly watch list, daily watch list, community of investors all looking to learn and grow together, as well as the SPY bot, which sends notifications directly to the Discord to keep us up to date no matter which direction the SPY is going. We have other bots that are coming soon. We're probably going to release Tesla, other mega cap stocks, and tradable stocks that a lot of people watch for options. All of that is coming soon. And right now, our SPY bot has been phenomenal at letting us see what's going on. And this is based off the 15-minute here. Bear indicator and no bull indicator. Now, before we break down everything that I'm thinking moving forward and my opinions, and this is not financial advice, this is my honest, humble opinion of what I see moving forward and based off the statements from the Fed, I want to share with you guys one of the home runs from the week from a few days ago and how it reacted in just a few days. If you want to get on early with us every single morning or every single week on the stocks we watch, check out the link down below in the description to the Discord. We look forward to having you join us, and we're going to jump right into it here with the S&P 500 index, the Fed statements, and what I honestly believe moving forward. So the home run that I'm going to share with you guys is from the weekly watch list. We don't just share stocks daily, we also share weekly watch lists when it comes to a point that there's an opportunity, and I want you guys to be aware of this. A lot of people think that we just day trade over at the Discord. There's opportunities for swing traders, day traders, long-term traders. No matter what it is, there's always going to be an opportunity. We're going to continue to look for them, strive for them, and if you want to get on early with us, whether it's from the weekly watch list, daily watch list, check out the link down below in the description to the Discord. We look forward to having you join us, and by joining, you'll become part of a growing community of investors all looking to learn and grow together. So this was the stock from our weekly watch list. This was near its 52-week low, and we caught it at a very impeccable timing, and you'll see it here on the chart. So I mentioned it on the 9th, as you could see there. That was on the 9th of January. The 10th, it bottomed out. It did a double bottom effect there at 150. That's what I was looking for. Started to gain strength, got a bull indicator, and in just a few days, it went up nearly 10 to 15%. Pulled back down and went for another run, hitting a highest point of 20% plus, guys, in a matter of just a few days, in less than a week. If you guys want to get on early with us, whether it's the weekly watch list, daily watch list, or the SPY bot, or opportunities we look for every single day, check out the link down below in the description to the Discord. We look forward to having you join us, and let's jump into these charts. So here we are with the S&P 500 index, and I've stated in previous videos how important clarity will be in this market because things are very, very turbulent in the more microscopic level, like day to day or week to week, you will see a lot of volatility. Now, if you zoom out though, on the 4 hour or the 1 day, it looks pretty clear that we've been in a correction mode since way up here. We had one little bull indicator pop up. Way up here was very short-lived from 4,600 to 4,700. And we've been in a bear indicator since 46, all the way to the lows here of 42. Some people are calling this the bottom, right? And then into the Fed meeting, things were pushing up, looking like their strength. And this right here, those of you that know about these candles and know about bars, that's not the strongest type of bar you want right after this one, okay? That doesn't always mean that things are looking pretty strong. We'll have to see, because things pulled downwards, they went up, and then they're pulling back down. So when you look at it from the bigger picture, and let's even put the 1 day, you could see that we've been under a bear indicator since way up here at 4,700. That little fake out right there, that probably was a bull trap. A lot of people probably caught this dip thinking things were over, and that is not the mentality in this market anymore. And that's the same thing I'm feeling about this one down here. These two dips, I feel like they're fake outs. And even if the stock market starts to turn back around and a slight bull indicator pops up here, if it does, it's going to be a big bull trap going into March, okay? Whatever the stock market does the next few weeks, all the way until the first rate hike, it's going to be a very tricky water to navigate. So holding is not going to be the best way to approach this market right now. I don't think it's going to be, even after March, the greatest idea. So anyone holding long term is going to feel the pain. But this is where having that stomach, right? This is not about how smart your brain is or how great your eyes are, even though the charts can trick the eyes. It's not about that. This is about endurance and having the stomach to endure through the volatility if you're holding or going long. Now, the way I'm approaching it, and I've stated in previous videos, I'm going to continue to look for the possibility that things have bottomed out, because one of the things this is having big trouble is bottoming out, right? This correction. Now, the last time we had white with red borders on 42 vision was way back here at 4,200, 4,300, and things slightly reversed. So we have to see things come back with real strength and also a bull indicator to signify some type of momentum. If not, it could end up being something like this, right? Where things pull downwards, right? And this is where I'm actually paying very close attention to what's going on. This was the 2020 correction / crash, right? Back in March, and things went ahead and slightly came back up, but we were under a bear indicator and no bull indicator popped up. And then a few days and weeks later, things continue to go lower, okay? And that's how people end up in that phase of those memes that say the dip of the dip of the dip of the dip, right? And then where is the dip? When in reality, you could see the fake outs with 42 vision, right? That's the whole goal for me. That's the whole purpose, and all the members are using it. Now, how does this tie up with my thoughts about the Fed? Like, why is this important? Well, this whole entire situation that we're in right now in correction and tapering, and also cutting back on obviously their balance sheet, that's going to be a huge step forward. That's what really created the bearishness that we saw here the last part of the day, and where it could actually create even further bearishness the next few days and the next few weeks. And that's because that is one step that's even larger than just rates. It is actually the point where stimulus, right, the printer, is going to stop injecting. So the tapering stops it, and then also the rebalancing, or at least their balance sheet being actually revised and cutting back on it as well, is going to remove liquidity from the systems. And we're already seeing it. Look how fast things are pulling back and being priced in by the market. And when we think we found the bottom, it's going to be that moment where it's not the bottom. And there's many different moments here that have seemed like the bottom, way up here, way down here, and way down here, and even right there, and things just continue to go lower. This is at a fighting point in the whole entire chart that's going to be super important moving forward in the projections of what may happen, right? for the rest of the year and even towards March and beyond. So right now, we have already broken through one of the first support levels, which was 4,400. The next one was down here at 42. And then below that is 4,000. If 4,000 gets broken through, the lowest point would be 3,600. And that turns out to be the 52-week low of the last 12 months. That's going to be a bearish scenario. Right now, we're in a correction scenario. Yes, this is pretty bearish, but in a correction, not at a crash. Okay? Crashes are very bearish. Corrections, they call them healthy because they're the setups for the next bull run. Once we get through this, I believe there's going to be strength, but not in every sector and not in every area. Okay? Holding stocks that are not profitable or have no really great outlook in the next 3 to 5 years is going to be very risky, and some of those stocks may never see even half of what they were in 2020 and 2021 for years and years to come. Some will probably bounce back, some may not. So this is going to be a very important time as an investor to figure out your new strategy or how you can evolve within these conditions. Because if you just started trading about a year ago, 2 years ago, 3 years ago, that is more than enough time to have experience. But that experience was only through a perfect, beautiful, stimulated bull market. This is the stock market, what we're going through right now. And this amount of volatility is going to create so many opportunities, okay? I'm going to continue to follow 42 Vision, Ultimate 42 Vision, the bull and bear indicators, and the SPY bots and the other bots that are going to be released to stay on edge and ahead of what's going on overall. So right now, yeah, things look like they're trying to bounce back. Then they're bouncing right back down. And we'll see how the rest of this week turns out because anything can happen. But $4,222 is a support level that if it gets broken through, our next one is 4,000. And if that one gets broken through, we are getting closer and closer to a bear territory. And things will be up and down, up and down. And there's going to be plenty of bull traps on the way that one needs to avoid with clarity in the charts and not FOMO, chase, and also patience, guys. Patience is what pays, and the stomach to endure through the volatility because huge opportunities are forming, are happening, and this is not where investing stops or ends. This is where it begins. As always, guys, thank you guys so much for watching, and let's make some money.